Hello and welcome to my channel, where I talk about the latest news and trends in the world of finance and economics. In today's video, I'm going to explain how the geopolitical tensions and conflicts around the world affect the prices of oil and gold, two of the most important commodities in the global market. Now, let's get started. Oil and gold are two of the most traded and valued commodities in the world. They are also very sensitive to geopolitical events, such as wars, sanctions, coups, or terrorist attacks. These events can create uncertainty, fear, and instability in the global market, which can affect the supply and demand of oil and gold, and ultimately their prices. Let's take a look at some of the recent geopolitical events that have had an impact on oil and gold prices. First, we have the ongoing war between Russia and Ukraine, which escalated in late February 2022, when Russian President Vladimir Putin ordered troops into eastern Ukraine, after recognizing two separatist regions as independent states. This sparked a strong reaction from the US and its allies, who threatened to impose sanctions against Russia and send military aid to Ukraine. This conflict has raised concerns about the security of oil and gas supplies from Russia to Europe, which depend on pipelines that cross through Ukraine. According to Russia is the largest exporter of natural gas and the second largest exporter of crude oil to Europe. Any disruption or cutoff of these supplies could cause a severe energy crisis in Europe, especially during winter. As a result, oil and gas prices have surged to record highs in recent weeks. According to global benchmark Brent crude oil climbed more than 3% to $98.92 per barrel on February 22, 2022, while natural gas prices climbed by more than 13%. Oil prices have also been supported by a supply deficit caused by low production from major oil producers, such as OPEC+. Gold prices have also benefited from the Russia-Ukraine conflict, as investors sought safe haven assets amid rising geopolitical risks. According to gold is often considered a safe haven asset against geopolitical tensions, as it can preserve its value and hedge against inflation and currency devaluation. Gold prices rose by more than 2% to $1,869 per ounce on February 22, 2022. Second, we have the ongoing nuclear negotiations between Iran and the US, which resumed in November 2021, after a hiatus of several months. The talks aim to revive the 2015 nuclear deal that was abandoned by former US President Donald Trump in 2018. The deal imposed limits on Iran's nuclear activities in exchange for sanctions relief from the US and other world powers. The negotiations have faced several challenges and delays, as both sides have expressed their demands and grievances. Iran has insisted on lifting all sanctions imposed by Trump, while the US has demanded that Iran return to full compliance with the deal. The talks have also been complicated by Iran's presidential election in June 2021, which brought a hardline conservative leader, Ebrahim Raisi, to power. The outcome of these talks could have a significant impact on oil prices, as Iran is one of the largest oil producers in the world. According to Iran has the fourth largest proven oil reserves and the second largest natural gas reserves in the world. However, its oil exports have been severely curtailed by US sanctions since 2018. If the talks succeed and sanctions are lifted, Iran could increase its oil production and exports by up to 2 million barrels per day, MB/D, according to some estimates. This could add more supply to an already tight oil market and put downward pressure on oil prices. However, if the talks fail and tensions escalate between Iran and the US or its allies in the region, oil prices could spike due to the risk of military confrontation or disruption of oil exports from the Persian Gulf. According to Iran has threatened to block the Strait of Hormuz, a narrow waterway that connects the Persian Gulf to the Arabian Sea, and through which about 20% of the world's oil passes. Any attempt to close or attack this vital route could trigger a major conflict and a supply shock in the oil market. Gold prices could also rise in this scenario, as investors would seek a safe haven asset amid heightened geopolitical uncertainty and volatility. According to two, gold prices spiked by more than 4% in January 2020, when the US killed Iranian General Qasem Soleimani in an airstrike, and Iran retaliated with missile attacks on US bases in Iraq. Gold prices reached a 7-year high of $1,611 per ounce on January 8, 2020. Third, we have the ongoing trade war between China and the US, which started in 2018 and has involved several rounds of tariffs and counter-tariffs on hundreds of billions of dollars worth of goods and services. The trade war has caused significant damage to both economies, as well as to global trade and growth. According to, the trade war reduced global GDP by 0.8% in 2019 and is expected to reduce it by another 0.5% in 2020. The trade war has also affected oil and gold prices, but in different ways. Oil prices have been negatively impacted by the trade war, as it has reduced the demand for oil from China, the world's largest oil importer and consumer. According to, China's oil demand growth slowed down from 5% in 2018 to 3% in 2019, due to the trade war and other domestic factors. Oil prices have also been pressured by the oversupply of oil from U.S. shale production, which reached a record high of 13 million barrels per day in November 2019. Gold prices have been positively impacted by the trade war, as it has increased the demand for gold as a safe haven asset and an alternative investment. According to, gold prices rose by more than 18% in 2019, reaching a 6-year high of $1,557 per ounce on September 4, 2019. Gold prices have also been supported by the lower interest rates and quantitative easing policies adopted by major central banks around the world, which have reduced the opportunity cost of holding gold and weakened the US dollar. In December 2019, China and the US announced a Phase 1 trade deal, which involved some tariff reductions and commitments on agricultural purchases, intellectual property protection, technology transfer, and currency manipulation. The deal was signed on January 15, 2020, and was seen as a positive step towards de-escalating the trade war. However, the deal did not address some of the core issues that triggered the trade war in the first place, such as China's industrial subsidies, state-owned enterprises, cybersecurity, and human rights. Moreover, the deal has been jeopardized by the COVID-19 pandemic, which originated in China and spread to the US and other countries. The pandemic has worsened the relations between China and the US, as both sides have blamed each other for mishandling or covering up the outbreak. As a result, oil and gold prices have remained volatile in 2020. Oil prices plunged to historic lows in April 2020, due to a collapse in demand caused by lockdowns and travel restrictions around the world. According to, global oil demand fell by about 30% in April 2020 compared to April 2019. Oil prices also suffered from a price war between Saudi Arabia and Russia, two of the largest oil producers in the world. The price war started when Russia refused to join OPEC Plus in cutting production to stabilize the oil market, and led to a historic deal between OPEC Plus and other major oil producers, such as the US, Canada, and Brazil, to cut global oil production by 9.7 million barrels per day in May and June 2020. According to one, this was the largest coordinated oil production cut in history, equivalent to about 10% of global supply. Oil prices recovered somewhat after the deal, reaching above $40 per barrel in June 2020. Gold prices also soared in 2020, reaching a record high of $2,067 per ounce on August 6, 2020. According to two, gold prices were boosted by the trade war, as well as by the unprecedented fiscal and monetary stimulus measures adopted by governments and central banks around the world to mitigate the economic impact of the pandemic. These measures increased the risk of inflation and currency devaluation, which made gold more attractive as a store of value and a hedge against uncertainty. In January 2021, China and the US reaffirmed their commitment to the Phase 1 trade deal, and agreed to cooperate on issues such as climate change and COVID-19. However, the trade war is far from over, as both sides still have unresolved disputes over tariffs, technology, human rights, and regional security. The trade war could escalate again under the new U.S. administration of President Joe Biden, who has vowed to take a tough stance on China and work with allies to counter its influence. Therefore, oil and gold prices could remain volatile in 2021, depending on the outcome of the trade negotiations and the evolution of the pandemic. Oil prices could face downward pressure from weak demand recovery, rising U.S. shale production, and potential supply increases from Iran or Libya. Gold prices could face upward pressure from continued stimulus measures, low interest rates, high debt levels, and geopolitical risks. To sum up, oil and gold prices are influenced by various geopolitical events and factors such as wars, sanctions, trade disputes, pandemics, inflation, currency movements, supply and demand dynamics, and investor sentiment. These events and factors can have different or opposite effects on oil and gold prices, depending on their nature and magnitude. Therefore, it is important to understand the relationship between oil and gold prices and how they reflect the state of the global economy and politics. That's all for today's video. I hope you learned something new and interesting. If you did, please give this video a thumbs up and share it with your friends. And don't forget to subscribe to my channel for more videos like this. Thank you for watching and see you next time.